Have you ever walked into a public toilet, had a look inside, and thought to yourself, it's okay, I'm gonna hold this one? Well, believe it or not, that exact subconscious thinking is an amateur investing mistake that will end up costing you millions. I recently asked 5 Wall Street veterans 10 simple questions to see if I could find a pattern in the way they invest. And the crazy thing is, there was only 2 questions they all answered the exact same. Last year, I nearly lost $250,000 US because of this exact issue. And in this video, I want to arm you with the knowledge that I've learned so that you can avoid such a major loss. Now, I'm not saying go to the nearest dirty toilet, drop off the kids, and you'll be guaranteed to be richer than Jonah Hill's swear jar. But what I am saying is the sooner that you recognize this subconscious error, the richer you will in turn become. Now, to properly understand this problem, I think it's best we go to the root cause and I show you my own exact mistake, because it nearly cost me everything. At a point last year, Facebook stock, or now known as Meta, was down more than 15% from its all-time high. I looked at this and I went, wow, it has to be a bargain. I still use Facebook for my own social media, mainly because I'm old and I really need to know what Stacey's mom is up to. I thought to myself, this has got to be a discount. This metaverse thingy coming is going to be huge. It's a surefire investment. I started to do my own research, check the cash flows, the balance sheet, the income. Everything just looked great other than an advertising slowdown. Every single indicator was pretty much showing me that Meta should have a bright future and was severely mispriced within the market. It's only a matter of time before this stock goes up and I make more money than a Kardashian sex tape. And what absolute bollocks, and not the big ones dangling in that tape. Meta stock started to tank. The business started burning cash faster than Sam Bankman-Fried on a Monopoly board. The metaverse project was just not coming together as planned, and the costs were just rising each quarter. It seemed that Mark Zuckerberg had completely lost the plot and was more focused on becoming a character from Sims. Every day that passed, there was a new Wall Street analyst coming out with a sell case for Meta. And they were right. My losses started to compound on top of themselves, and within 6 months I was down near 50% of my initial investment, an investment I thought was a guaranteed win. The unrealized loss turned into a massive amount of pain. It became unbearable. I've seen many close friends and many other people have success with seemingly worse companies with less cash flow. $7? 1 year in, pretty much to the day of my initial investment, I remember checking I was down 73% on my investment. I felt like a complete failure. I was in a horrible place. Being on YouTube and having public videos where I justified buys into Meta, it just compounded into the pain. I was thinking, I'm down 70% on my first call. How the hell did this happen? It was like I'd walked into that bad public toilet, done the business, bared through the pain, only to realize there was no toilet paper. I remember waking up at night thinking, how am I going to tell my wife? I couldn't take the pain any longer. The numbers still made a bit of sense. But the stock market and Wall Street are clearly seeing something that I couldn't see. How do I get rid of this constant stomachache other than sell the stock? As hope was fading, I remembered a very famous quote from Baron Rothschild. It says, buy when there's blood in the streets, even if the blood is your own. And the funny thing is, that exact quote is subconsciously what I was doing all along. And it's how I got out of this whole meta hole. When I was speaking to these Wall Street experts, and these videos will be soon on my Patreon, I realized that after years of reading investing books and buying and selling stocks with some relative success, I was still only human, as is everybody watching this video, unless you're watching after Judgment Day. The fact is, nobody likes seeing red on an investment and in their brokerage account, and it was those exact emotions that nearly led me to realize a huge loss. When I asked these Wall Street experts the question, what do you do when a position you've got conviction in goes down 25%, they all answered pretty much word for word this exact answer. Buy more if the numbers still make sense, even if it is painful to justify. If the numbers in the business still make sense and the stock has fallen, you should be extremely happy, not sad, because now you have a greater opportunity. This simple mindset is exactly like the bathroom example. Sometimes investing can be very uncomfortable. Sometimes it absolutely stinks. But at the end of the day, when you need to use the toilet toilet and you see one, you should use the toilet. Provided you have the right attitude and continue to have conviction, you will get through the pain and eventually relief will come to your investment and be worth it, provided the numbers continue to make sense. Peter Lynch is one of my favorite investors of all time, and his best quote in my opinion is, "The key to making money in stocks is not to be scared out of them." So all 5 experts I spoke to said, do not panic sell your stocks. But the interesting thing is, the second question they all unanimously answered is something that 84% of investors are failing at, even though there's a very old and simple fix to this massive problem. This problem is so overlooked. If you can fix just this and get it working for you, it will skyrocket your wealth higher than Snoop Dogg on a Saturday night, and I cover it in this video here. Now, if you excuse me, I've got some business I need to take care of.